Good evening. This is Chris Brecher with the Simpler Stocks free video for April 4th, 2016. I'm actually doing this on April 3rd, late in the night. Just got back from, unfortunately, a funeral. But just want to let you know what we were seeing Friday and what we're seeing today. Before the opening, what I think is going to happen. Basically, on Friday, what we got is something really interesting. We got the market opening way down on Friday morning, because the Nikkei was way down, which I'll get to. Then you had the market, as you see, really reverse from down almost 17 points on the ESs to up 14. So there were two reasons I think this happened. Three reasons, actually. One of them is, and I'm not making this up, but the New York Stock Exchange ARCA halted in 8 stocks on Friday. They halted in the big ones, on the Googles, the Amazons. And when the New York ARCA does that, a lot of times algorithms get all screwy, and what people do is they basically just cover their shorts. I've just seen it a million times. Look what happened to Google on the right after the opening when they announced that it had been halted for the day, the entire day. They went to some new system that they started February 1st, and they came out and clarified it was not an April Fool's joke. So if you actually go to New York Stock Exchange, ARCA halted, and put it on Google, and I believe you're going to get that in there that of what happened. And basically in there is a lot of, like I said, I've seen a lot of times when that has happened. I'm actually going to search tools as I talk to you so you can know what I'm talking about. But that's one thing that I've seen happen. So, and if it was an April Fool's joke, all I know is it kept me from covering my shorts anyway. The other thing, two things that I think are important in here is, number one, it was the beginning of the month. And, we talk about the beginning of the month jumper trade. And what the jumper means is that institutions, mutual funds have to deploy money the first day of the month. So when you saw the market open down, I was thinking, I know the advanced declines look lousy. I know they never really improved, but it was like a fierce fight then where you got, let me show you on the right, you get the advanced declines acting bad actually all day. So they closed down 128 even though the market closed up 100 and the ES is up 1425. The whole key on this is that shows the institutions targeted a very narrow amount of the S&P. Because the entire New York advanced decline was weak, so the internals were weak, but they went after the big ones, and that's exactly what happened. Now, what do I think going forward? Number one, what we got, the NASDAQ was up about 52 on Friday. Like I said, some of that definitely could be what happened with that those ARCA halts. And the other thing in there is, of what I've seen is we have a big divergence right now. Now, the thing is, I've seen more traders hurt when there are big divergences. What do I mean by that? You have the ESs on the left. I'm going to actually show you a chart from TradingView also. But here's the ESs on the left. Obviously, and we've showed this a million times, and we've seen this rally in the Dow right here. I mean, the S&P. So we have it going right up to resistance here. Now, I want you to notice there are two other major divergences in here. You've finally seen some things on really over the weekend from Zero Hedge talking about the Nikkei. I had mentioned a little before them. Check out this chart on the right and check out this chart on the left. Now, I want you to zoom out of this and see it even more dramatic is this. Notice that when the Nikkei fell apart last August, then our market fell apart a little later. Then notice our market went up. Nikkei started to roll over. Guess when? December 10th. And when did our market fall apart? The end of December. Usually the Nikkei is a leading indicator in this. Now what I want you to see in this is you can see this sort of similar pattern. I'm going to take my other drawing tool. This similar pattern like this. There's one little problem. You have the ESs on the left going up and you have the Nikkei on the right going down. This is a big divergence. That's something that bears watching. Now, the problem is so many people mentioned it over the weekend after I mentioned it that you wonder if it won't work. But I don't care what they say. When you see this amount of divergence, when you see the Nikkei almost, within 1,000 points right here in February, but you see this almost at a new all-time high, that gives you a pause for worry. Other thing I'm watching in here is the HYG. This is the high yield bonds. Now what this is these are the bonds that are more risky. They're usually a symptom of how the economy is acting. Now a lot of these high yield bonds are concentrated in the crude oil complex. That, in the oil drilling, oil exploration context. That's why when oil rallied, this rallied. But I want you to see something very interesting that's been happening the last 2 weeks. You have on the left the ESs going straight up like this, and all of a sudden you have the HYG back where it was on March 1st. Where was the ESs on March 1st? 1950. Where are they now? 2064. This is something to watch and to pay close attention. Why do I say that? I talk all the time about point of no return. You got to watch this little head and shoulders. If this breaks here and gets in this area on the right, this is really going to take notice of that. That's a big divergence. So now you have the Nikkei, you have the high yield bonds, big thing to watch in here. And also you have lack of buybacks. And like I had said before, on the first day of the month, a lot of times you get a sharp rally, but this time you didn't have the stock buybacks. The way I look at it is you get a more muted rally. We were up 14 points. I wouldn't say that's spectacular because we've had first days of the month where we've had the S&Ps up 30 handles, but it was up. We're going to have this week where you're going to have the worry about the upcoming earnings. April 11th, keep that in mind. That's the day Alcoa starts off the earnings season. But you have the HYG, you have the Nikkei really showing negative divergence. You're not going to have the fuel for the fire, so to speak, on Monday and tomorrow, and that's why you could see some weakness coming up. So I hope this helps everybody. Like I love to show the actual simpler stocks and show you what the deal we have in here. Actually, in here, just so you know, we have a $7 30-day trial. And like I said, literally 2,000 people have taken advantage of it. Right here, what we have every day is chart ideas. Like tonight, I'm going to be posting index charts, individual stock charts, and some interesting ideas. We have a chat room every morning. If you press on this, every morning in here from 8 to 9:15 a.m. New York time, I'm on live. And usually I stay on a little longer than that. Everybody can ask questions. We banter back and forth. Other thing we have in here, if you go back in here, is we have the forum where people post things all day and night. And I respond all the time to them, as everybody knows. We have all these in here. And also we have special things every week, where this week we're having using unusual options activity. We're having just a free little seminar for members from 6:30 to 7:15 p.m. So you see in here, not a member, sign up. You get the $7 trial for 30 days, and you can hear one of these classes for free. So I hope this helps everybody. I'm sorry I have it out so late, and I will be talking to you tomorrow night. Take care.